Welcome, everyone. I'm David, and with me today is Sophia, ready to help us unpack a mountain of information.
Ready when you are. We have a pretty extraordinary story today, all centered on SoftBank Group Corp.
Welcome, everyone, to TechDaily.ai. You can sponsor this podcast for just $25. Your message will be featured across major platforms like Apple Podcasts, Amazon Music, Spotify, and more. If you're interested, contact info@techdaily.ai to get started today.
And we're not just, looking at their financials for the 6 months ending September 30, 2025. We're really tracking where this phenomenal amount of cash came from.
And, more importantly, where it's going.
Exactly. It's all being funneled into this incredibly aggressive, almost existential pivot toward what they're calling artificial superintelligence.
That's the core of it. We're looking at what might be one of the most pivotal moments in their recent history. They have gone from some really uncertain times, big losses, to posting this absolutely massive rebound.
So we need to figure out what provided that rocket fuel.
Right, and then see how they're strategically spending that capital across chips, robotics, and generative AI. It's a huge strategic shift.
It really is.
Okay, so let's just start with the headline figures, because they really they paint the picture of this comeback.
The scale is stunning.
It is. Compared to the same 6-month period last year, the turnaround is just, well, it's wild. For the individual investor, just look at basic earnings per share EPS. It tripled.
It's a crazy jump.
It went from about 680 all the way up to an astounding 2,041 PAS and 50.
And when you see that kind of growth in EPS, you know right away it wasn't their core business driving thing.
Not at all.
I mean, net sales grew, but modestly, only about 7.7%, reaching roughly, 3.7 trillion? The real engine here was the gain on their investments.
And that number.
That gain hit nearly 4 trillion, an increase of almost 50% year over year.
So let's just put that in perspective. We are talking about a company that generated nearly 3 trillion yen. That's roughly $20 billion in net income. And it's almost all thanks to investment performance, not sales.
190% increase in that income figure. It's a singular, massive financial event.
Absolutely. And with that success, their whole financial picture looks healthier, right? The balance sheet is stronger.
It is. The ratio of equity attributable to owners, it climbed pretty noticeably from about 25.7% earlier in the year to 29.1% by September.
Which is vital. You can't make these world-altering bets if your own house isn't in order.
Exactly. That stability makes their huge strategic moves much more credible. So now that we see the scale of it, let's talk about how it happened.
Okay, let's drill down into the investment engine itself. The SoftBank Vision Funds.
Right, the SVF. If you isolate that segment, they recorded a gain of over 3.4 trillion. That's a 469.5% increase in gains for that part of the business.
Just a massive swing from where they were.
It is, and this is where the story really crystallizes because we know pretty much exactly where the bulk of that money came from.
The explosive valuation of OpenAI.
100%. SVF2 was the main vehicle here. It generated a $13.8 billion gain in this period. And get this, nearly 93% of that gain, a colossal $12.8 billion, was directly tied to their investment in OpenAI.
So this wasn't some diversified success story. This was a single catalyst.
A single massive catalyst. And that $12.8 billion is interesting, too, because of how it's structured. It's not all pure equity gain.
Right, it was split. Part of it was an unrealized gain on the equity they hold, but another huge chunk was from a derivative, a forward contract.
Exactly. The unrealized gain was about $6.6 billion, but they also booked a $6.2 billion derivative gain on something called the OpenAI forward contract.
So for anyone listening who isn't familiar with that, what does that actually mean?
It means they gained that value just from securing the right to invest at a fixed price later on. Think of it like they bought a ticket to buy future shares at a pre-agreed valuation.
A valuation that turned out to be much, much lower than the market price.
Precisely. So they successfully bet on the future value of OpenAI, and they realized over $6 billion just from the contract itself. It was a brilliant move to secure their position on favorable terms.
And this is all part of their plan for that massive $30 billion effective investment in OpenAI, which all hinges on that staggering $260 billion pre-money valuation.
It does. They did the first closing back in April 2025, with SVF2 putting in $7.5 billion.
But given how volatile the vision funds have been, does relying on one single massive gain like this expose them to too much risk?
It's a great question. It certainly does, but it also shows an extreme level of conviction. And to really highlight the stakes here, the CEO, Masayoshi Son, he personally guaranteed over $1 billion, $1,309 million of the borrowing that SVF2 took on for the OpenAI investment.
So he's putting significant personal capital on the line.
He is, but we do have to add some context. Even with this incredible OpenAI boost, SVF2 as a fund is still technically holding a cumulative gross loss of $9.1 billion since it started, so it's still got some ground to make up.
That's fascinating. But the whole ecosystem does seem to be improving. SVF1 also had a solid gain, right?
It did. SVF1 recorded a $9.3 billion gain in the period, mostly driven by momentum in listed companies like Coupang and Didi. So, since its inception, SVF1 is now sitting on a solid $32.8 billion gain.
Okay, so these huge investment gains gave them the capacity to act, but they also used this period to do some financial housekeeping.
That's a good way to put it. They were basically converting mature, non-core assets into pure liquid seed money for their AI strategy.
And you can see that commitment when you look at the asset sales. They raised serious cash.
Very serious. The big one was selling 40.2 million shares of T-Mobile, which generated $9.17 billion in proceeds. That's billions ready for immediate reinvestment.
And that wasn't all, was it? Right after this reporting period, they made another huge move.
They did. In October 2025, they sold all the remaining shares in Nvidia for $5.83 billion. When you look at that whole series of divestments, it shows a total institutional commitment to liquidating legacy assets to fund these next-gen AI bets.
They also streamlined their balance sheet, generating another, $2.37 billion from some derivative settlements with Deutsche Telekom shares.
Yeah, and they confirmed they settled all of those complex financial instruments, the prepaid forwards with Alibaba shares, the collar transactions with Deutsche Telekom shares, all of it.
Which effectively clears the decks.
It clears the decks entirely. Those things tie up collateral and create complex legal structures. Getting rid of those derivative liabilities immediately frees up capital and just simplifies the whole picture.
And speaking of capacity, they seriously boosted their war chest.
Massively. They increased their arm margin loan facility from $13.5 billion all the way up to $20 billion. And as of November, $11.5 billion of that was still undrawn.
That is extreme liquidity for future acquisitions.
And at the same time, they were thinking about shareholders. They retired over 42 million shares through a buyback. And crucially, the board approved a 4-for-1 share split.
A very shareholder-friendly move to make the stock more accessible to retail investors.
It really reinforces that post-rebound image of stability and accessibility.
So now we get to the fun part. The deployment of all that capital. All that cash generation was for a very specific, aggressive future strategy.
A future centered around artificial superintelligence. They're framing it around 4 essential interconnected areas: AI chips, AI robots, AI data centers, and energy. And we saw immediate decisive moves in the first 2.
They aren't just investing, they're vertically integrating. They want to own the entire stack.
That's the perfect way to describe it. Let's start with chips. They announced the acquisition of Ampear for $6.5 billion.
And Ampear is a U.S. semiconductor design company focused on high-performance AI compute. So why is this one so crucial?
Because it closes the loop. SoftBank already owns ARM, which is the foundational IP for, most mobile chips and now increasingly server chips. By buying Ampear, they get an elite design team that's focused on making highly optimized AI chips based specifically on the ARM platform.
So it's an immediate in-house synergy.
Exactly. They can ensure their chips are designed for the specific AI needs of their broader ecosystem, maximizing performance for their own robots and data centers.
Okay, so then we move from the brain to the body, the physical world. The acquisition of ABB's robotics business for over $5 billion, $5.375 billion, is a huge move.
It's a massive commitment to industrial automation. It instantly centralizes a vast amount of robotics expertise, manufacturing power, and market share right under the SoftBank umbrella.
They're not waiting for others to build the physical hardware.
No, they're buying the infrastructure. And to tie it all together, they centralized 20 of their existing robotics investments companies like AutoStore and Agile Robots into a new entity called RoboHD.
Valued at almost $8 billion.
All to create a single unified robotics division. It's like you said, they're not just building the skyscraper, they're buying the quarry, the concrete company, and the architect firm. They want every layer of the ASI stack.
And meanwhile, their crown jewel, ARM, just continues to crush it.
Oh, absolutely. ARM's segment income skyrocketed 518.4% in the period. The market recognizes the value of that underlying IP.
And they're not standing still. They keep pushing into new areas.
Right. They're making sure their IP is central to the future of AI compute, whether it's in a car, a factory, or your phone. They just unveiled the ARM Zena CSS for AI in vehicles and the ARM Lumex CSS for AI on mobile and PC devices.
Okay, so they have the chips, they have the bodies. Now, let's talk about the brain, the software layer. This is the most immediate news, right? SoftBank and Nvidia are reportedly in talks to co-invest in a company called Skild AI.
This is probably the most critical layer of all, the foundational software. Skilled AI develops what they call foundation models. Think of it like universal software that can serve as the brain for robots.
So they're not making hardware.
No, they focus entirely on the AI models themselves, on teaching robots generalized skills, perception, complex decision-making. They're solving the software problem so all that hardware they just bought can actually function intelligently.
And the potential valuation here just shows their urgency, their conviction. The rumored round is over $1 billion, and it could value Skilled AI at around $14 billion.
Which is nearly triple its valuation from its Series B round just earlier this year.
What does a valuation jump like that tell you?
It tells me they saw proof of concept, and they realized that this technology, the universal software brain, is the single biggest bottleneck to achieving generalized robotics.
And they needed to secure control immediately.
Immediately. When a strategic investor triples a valuation in just a few months, it means they believe the tech is about to leave the lab and enter the real world. This transaction, if it closes before Christmas, it really cements their entire strategy.
So to sum it up, OpenAI gave them the billions, and they immediately put that money to work building the entire structure, buying chip design with Ampear, acquiring the physical manufacturing with ABB Robotics, and now potentially making a $14 billion bet on the robot brain with Skilled AI.
It's an incredible story of financial engineering. That single outsized gain from OpenAI funded this massive strategic shift. It let them clean house financially, sell off assets and clear derivatives, but more importantly, it let them execute these huge strategic acquisitions.
Their path forward seems crystal clear.
It is acquiring and building foundational technology to realize artificial superintelligence by owning every single critical piece of the value chain.
It's a profound commitment. And if you consider this aggressive vertical integration, consolidating the physical robots, buying the chip design capacity, betting billions on these universal foundation models, what does that imply about the timeline for truly ubiquitous general-purpose robots?
That's the big question.
If they're spinning at this speed, they clearly believe the era of AI-driven robotics isn't some distant future. They seem to believe it's imminent. And that's something for you to ponder as you process all this fascinating information. Thank you so much for breaking all this down for us.
Bye, Les.
And thank you all for listening. We'll be back next time with another analysis of the knowledge you need to stay informed.